Okay, let's unpack this. Imagine a single transaction. So enormous, right? So historically significant that it just sends these tidal waves of debate through the entire crypto world.
Yeah, that's huge.
We're talking billions of dollars, billions, and tied to not just to Bitcoin's present, but like to its very genesis, its earliest days.
Right back to the beginning.
Exactly. So today we're doing a deep dive into an event that, well, it recently rocked the crypto community, sparked some really intense discussion, especially over on Twitter.
Oh, yeah, it blew up there.
And it's forcing everyone from the seasoned vets to people just curious about crypto to kind of re-examine what Bitcoin truly is, what it's becoming, and maybe what it should be. So our mission with this deep dive is pretty clear. We're going to meticulously dissect every detail of this monumental sale. We're talking Galaxy Digital, $9 billion, 80,000 Bitcoin.
Huge numbers.
And crucially, this wasn't just any sale. It was done for a Satoshi-era investor. We'll get into what that means.
A very key detail.
And we'll explore the totally conflicting interpretations that just popped up immediately. Was it just practical estate planning? Or was it, like some people worried, a worrying sign, maybe even a loss of faith?
That's the core of the debate, really.
And ultimately, our goal is to figure out what this single huge event tells us about Bitcoin's, ongoing identity crisis. This sort of struggle between its revolutionary cypherpunk roots and this increasingly institutional future.
It's fascinating, isn't it? How one transaction, which on the surface is just, a financial maneuver, can bring Bitcoin's most fundamental questions roaring right back into sharp focus.
Simply.
It's not just about the staggering amount of money involved, though, that gets headlines. It's more about the profound implications, what it signifies for the whole ecosystem.
Yeah.
This isn't just another trade you see scrolling past. This is something that makes us look inward in the philosophy driving Bitcoin and how that philosophy might be evolving.
Yeah.
Or, as some folks argue, maybe even devolving.
Exactly. And for you listening in, this deep dive isn't just about, complex financial numbers or abstract market stuff.
It's much deeper.
It's a shortcut, really, a way to grasp the evolving philosophy, the tensions underneath, the deeply personal convictions behind one of the most talked about assets in the world today. It gives you a unique lens, to understand these complex dynamics in a space that's changing so fast, helps you make sense of why one single sale can cause such a profound ideological stir, such an existential debate almost.
It really does.
So let's get into the heart of it. Okay, let's start with the facts. The undisputed details of this monumental sale, the core transaction itself. We're talking about an absolutely unprecedented movement of wealth here. So let's start with the who. Who was behind this?
Right.
The source material calls them a Satoshi-era investor. Now, in the Bitcoin world, that term, it's not just loaded, it's almost mythical, right? What does Satoshi era actually imply about this person or entity? Why is that so significant?
Oh, Satoshi era is. It's profoundly significant. Yeah, it goes way beyond just being an early adopter.
Yeah.
That doesn't quite capture it.
Okay.
This term signifies someone who's there, like right at the very beginning.
Right.
Probably within the first year or two of Bitcoin's existence. Maybe even 2009, 2010.
Wow, okay. Back then.
Back then, during that really nascent period, Bitcoin was largely unknown. Outside of this tiny kind of insular group of cryptographers, tech enthusiasts, cypherpunks.
Right, nobody had heard of it.
Exactly. It had no established market value, no exchanges to speak of, really. Most people just saw it as this obscure, maybe even whimsical digital experiment. These individuals, they weren't just buying an asset like you do today. They were participating in this grand, very uncertain experiment, often mining Bitcoin on their home computers.
Yeah, I remember hearing about that.
Or getting it through direct peer-to-peer swaps for pennies.
Wow.
And they held these things through everything, every crazy parabolic rise, every gut-wrenching crash for well over a decade.
Incredible patience.
Or conviction. Both, probably. The connection to Bitcoin isn't just financial. It's historical. It's ideological. And yeah, for the community, it's almost mythological. They're seen as the original torchbearers, right?
Yeah.
The true believers who saw the vision before anyone else.
So when you hear that someone from that group, one of the absolute originals, is making a move this big,
It immediately commands attention.
Yeah.
It carries immense symbolic weight, regardless of the reason.
And the what? The sheer volume of Bitcoin involved here, how much were you actually talking about?
We're talking about 80,000 Bitcoin, BTC.
80,000.
80,000. Just to put that into perspective, at the value around the time this came out, that's That's an enormous chunk of the total circulating supply,
Hmm.
all concentrated in the hands of one entity.
Wow.
It's a volume that, I mean, if you didn't handle it with extreme care, it could easily trigger significant market volatility. Easily.
And the value, because this is where the numbers just, they
Exactly.
start to defy imagination.
The reported notional value at the time of disclosure was $9 billion.
$9 billion.
Yeah. 9 with 9 zeros. I mean, to grasp that scale, think about it. $9 billion is more than the GDP of many small nations.
That's insane.
It's a sum that just transcends typical individual wealth. It crosses into the realm of institutional, maybe even sovereign asset holdings. For a single digital asset to represent that much concentrated wealth for one entity, well, it's a testament to Bitcoin's journey in itself.
And who facilitated this? Who helped this investor move such an incredible sum? Given the scale, you can't just sell that on an open exchange, right?
Absolutely not. That would be Galaxy Digital, ticker GLXY.
Okay, Galaxy Digital. I know the name.
Yeah, they're a prominent player. Highly respected in the crypto institutional space. Founded by Michael Novogratz, he's a very well-known figure, deep background in traditional finance, made a big pivot into crypto.
Right.
Their involvement immediately signals something important. This was not some individual just, selling off a few coins on Coinbase. This was highly sophisticated,
Yeah.
private, an institutional-grade transaction.
So the report called it one of the largest notional BTC transactions ever. You mentioned notional value earlier. What does that specifically mean here? And what was the stated reason? Why did this Satoshi-era whale make such a massive divestment?
Good questions. So a notional value in this context, it refers to the total face value of the assets involved. But it implies the actual market impact was carefully managed. It was likely done to be much less disruptive than if that whole 80,000 BTC was just dumped on the public markets all at once.
Okay, so managed to avoid crashing the price.
Exactly. And Galaxy Digital explicitly stated the reason. The sale was part of the seller's estate planning strategy.
Yeah.
It's a crucial detail because it paints a very different picture than, say, a panic sale or someone suddenly losing conviction because the market dipped.
Right, it sounds more strategic, planned.
It points to a deliberate long-term financial strategy.
The scale here is just, it's mind-blowing. $9 billion. That's not just a big number. For you listening, what does it even mean when a single person, or maybe an entity, holds that much concentrated wealth in what's still a relatively young asset? It brings up huge questions, doesn't it? About wealth concentration, about the rewards of being super early, and how these massive digital fortunes are actually managed.
It really does. I mean, when we talk about $9 billion in Bitcoin held by one entity, it underscores a level of wealth and maybe foresight. It's almost unimaginable to the average person.
Totally.
Holding that much in an asset like Bitcoin, which remember was once dismissed as niche, experimental, maybe even a scam.
Oh, yeah. People laughed at it.
Right. It highlights the extraordinary, truly life-altering gains reaped by those who had the vision, the conviction, and maybe just the sheer fortitude to get in incredibly early and then hold through a decade plus of insane volatility.
Yeah.
And the involvement of a firm like Galaxy Digital. That's absolutely paramount here. As you said, you simply don't put 80,000 Bitcoin up for sale on a regular retail exchange. Not Coinbase, not Binance, New Republic.
It would break the market.
Instantly. A transaction of that magnitude, if executed on open markets, would cause immediate severe disruption. You would almost certainly crash the price. The slippage would be immense. Galaxy Digital, acting as this institutional facilitator, would have handled this with meticulous care, probably through over-the-counter desks, OTC desks.
Okay, OTC, so not on the public exchanges.
Exactly. Or maybe through private placements with other large institutional buyers, people with deep pockets who could absorb that kind of volume without blinking.
Can you explain OTC desks a bit more? What does that actually look like?
Sure. Think of it as direct off-exchange trading. It's like a highly customized private negotiation. Galaxy Digital would be talking directly to a select group of potential buyers, maybe large hedge funds, sovereign wealth funds, maybe other big crypto-native institutions.
So behind closed doors?
Essentially, yes. This process completely bypasses the public order books you see on exchanges. That prevents the kind of flash crash that would happen if 80,000 BTC just suddenly appeared for sale publicly.
Got it.
These deals often involve really sophisticated legal contracts. Sometimes they might structure it with options or staggered delivery over time to further smooth out any price impact and ensure discretion. It's very similar to how a huge block of shares in a public company might be sold quietly to institutional investors, rather than just flooding the open market and tanking the stock price.
Okay, so definitely not someone just hitting the sell button on their phone app. This is a serious, large-scale financial maneuver, like managing a multi-billion-dollar traditional asset.
Precisely.
And this estate planning angle, what does that really entail for someone with this level of wealth, especially in a novel asset like Bitcoin? It must be complicated.
Oh, incredibly complicated. Yeah.
Yeah.
It signals a level of financial planning and sophistication you'd normally associate with managing, say, a diverse portfolio of stocks, bonds, real estate. But now applied to Bitcoin. For an ultra-high net worth individual, especially one sitting on billions in a single, relatively new, volatile asset like Bitcoin, estate planning is. It's a complex beast. It's not just about drafting a will.
No.
It's fundamentally about minimizing potentially huge tax liabilities. Think capital gains tax when it's eventually sold. It's about ensuring a smooth, legally sound generational transfer of wealth, diversifying assets maybe to manage long-term risk for the beneficiaries, and providing liquidity, actual cash, for heirs or maybe charitable foundations without wrecking the market or creating a huge burden for whoever inherits it.
That makes sense. Selling $9 billion of Bitcoin suddenly would be a nightmare for the heirs, too.
Exactly. Imagine trying to pass that on.
Yeah.
$9 billion worth of a highly volatile, somewhat illiquid digital asset to your kids or a trust. You could trigger enormous capital gains taxes, maybe complex inheritance taxes depending on where they live. Plus, just handling the digital assets themselves, establishing clear ownership in a trust, ensuring secure access to private keys across borders that can be a legal minefield.
Yeah, the practicalities must be immense.
They are. So this kind of large-scale facilitated sale allows the original holder to basically convert a chunk of their highly appreciated, very concentrated, and somewhat illiquid digital asset into more traditional, diversified liquid assets.
Yeah.
Cash, stocks, bonds, whatever.
Okay.
It provides a clean, managed way to deal with the tax implications up front. And it ensures that future generations receive stable, usable wealth without the massive responsibility and risk of managing such a huge, singular, volatile Bitcoin holding.
So it's a sign that Bitcoin is growing up, becoming part of these established wealth management structures.
I think that's a fair way to put it, yeah.
Yeah.
It's evolving from this niche digital currency into a recognized, albeit still unique, asset class, one that can be integrated into sophisticated wealth planning, just like any other major asset.
So you're saying it's less about a judgment on Bitcoin's future price or its fundamental value?
Potentially, yes.
And more about just sound financial stewardship for someone sitting on an absolutely extraordinary amount of wealth.
That's the practical interpretation, absolutely.
You could compare it maybe to a founder selling off a big chunk of their super successful company after years of building it. Not because they stopped believing in the company, right? But because they need to diversify their personal wealth, maybe fund something new, or just prepare for their legacy, their succession plan.
That's a perfect analogy.
Yeah.
Or think of a long-term investor in, say, Apple or Microsoft stock. They bought it decades ago. It's appreciated immensely. Now they decide to rebalance their portfolio. Sell a significant portion, maybe invest in other things, generate income, fund philanthropy.
Right. It's just portfolio management at an enormous scale.
Exactly. It's a strategic move. Securing liquidity, managing risk, thinking multi-generationally. It reflects the asset's current immense value, rather than necessarily being a prediction of its future demise. You could argue that for this investor, Bitcoin has done its job, delivered unimaginable returns. Now it's time to manage those returns responsibly for the long haul, for legacy, for financial security.
Okay. That's the practical side. Makes a lot of sense. But
Yeah.
despite Galaxy Digital clearly stating this was about estate planning,
the transaction was, as the source says, immediately seen as symbolic. It instantly sparked this duality. For some, yeah, practical rebalancing, maturity. But for others, it quickly became a worrying sign.
yes.
And this is where Scott Melker comes in. He's a big voice in crypto, right?
Yeah.
Analyst, commentator, the wolf of all streets.
That's him. Widely followed.
And he apparently fanned the flames with a sharply worded post on X. He suggested that, quote, some early whales are losing faith.
Yeah, Melker's statement was, it was like throwing a match into a very dry tinderbox. It just immediately ignited this widespread, very passionate debate.
Why that phrase, though? Losing faith?
It wasn't just a casual comment. It was a direct challenge, really, to a core belief in the Bitcoin community, especially targeting early whales. The implication of losing faith just resonated. And it provoked a massive response because it touched on the deepest convictions people hold in this space. So what does this all mean then? When someone with Melker's platform says something like that, specifically about early whales and losing faith, why does it hit such a nerve? What is it about that word faith in the context of crypto, particularly Bitcoin? Why is that so potent?
Oh, faith is. It's an incredibly crucial word and a very loaded one in the crypto community,
Hmm.
especially for Bitcoin. Because Bitcoin's entire journey from day one has been so deeply intertwined with belief, with conviction.
Right. It wasn't backed by anything initially.
Exactly. Unlike traditional assets backed by governments or central banks or big companies, Bitcoin initially had no intrinsic value, nothing beyond what its earliest adopters believed it could become. Its very existence, its phenomenal growth over the years, it's really a testament to the collective faith of its followers. Faith in the tech, faith in its decentralization, faith in its potential to offer this alternative financial system, free from censorship, free from third-party control.
And that ties into HODL, right?
Yeah, absolutely. The whole HODL thing famously started from that typo back in 2013. Someone meant to type, "I am holding," but wrote, "I am holding."
Yeah, I remember that story.
It became so much more than just a meme and evolved into this mantra, a philosophy almost, representing that unwavering conviction, that almost religious belief in Bitcoin's long-term value, its revolutionary potential, regardless of the crazy short-term price swings or market crashes.
Hold on for dear life.
Hold on for dear life. It embodies that idea. You get Bitcoin and you just hold
Mm.
through thick and thin
Yeah.
because you believe.
Okay, so when someone suggests that the early whales, the ones who embodied that foundational faith from the start, who held through everything, all the FUD campaigns.
Here, uncertainty, doubt. Yeah.
Yeah, when someone suggests they are now losing faith.
It challenges the entire ideological foundation, the foundation upon which many believe Bitcoin is built. It's not just about them selling for profit, which everyone understands.
Yeah.
The losing faith part implies something deeper, an ideological shift, a questioning of the very principles that brought Bitcoin into existence.
It attacks that narrative of long-term conviction.
Directly, that ideological alignment, that belief in the foundational principles, beyond just the price going up, and that immediately triggers this huge debate, polarizes the community. On one side, you have people saying, look, this is natural, it's healthy, it's part of market maturity.
A practical view.
Right. But on the other side, you have people interpreting it as a warning sign, a sign that maybe the original vision is being compromised, or that Bitcoin is just becoming another speculative tool for the rich. It forces the community to confront whether its original vision is still alive or if it's morphing into something fundamentally different.
It's like seeing the pioneers, right, the founding members of some revolutionary movement suddenly deciding to walk away or cash out. It makes everyone else ask, wait, if they're leaving, if they don't believe anymore, what does that mean for us? Are they seeing something we're missing?
That's exactly the fear it taps into.
So for you, the listener, if you've been following Bitcoin for a while, does hearing something like that shake your confidence? Does it make you question your own conviction? Or maybe if you're new to it, does it make you wonder about the underlying stability, the purpose of this whole thing? This one transaction, especially framed by Melker, it just became this flashpoint for Bitcoin's very identity. Which brings us right to these two diverging interpretations. The practical rebalancing argument versus the losing faith argument. Let's dig into the practical side again first. This idea that the sale was purely strategic, calculated, all about that estate planning strategy. What does estate planning really involve when you're talking billions in Bitcoin? It's got to be way more than just writing a will, right? Especially with digital assets.
Oh, absolutely. Miles beyond a simple will. For an ultra-high net worth individual or family, especially holding billions in a single new-ish volatile asset like Bitcoin, estate planning is.
Yeah.
It's incredibly sophisticated, multifaceted. It's not just about who gets what. It's fundamentally about minimizing those enormous tax hits, especially capital gains when things are sold. It's about ensuring the wealth transfer is smooth, legally watertight across generations. It's about diversifying the assets so the heirs aren't just holding one risky thing. And crucially, it's about providing liquidity cash for beneficiaries, maybe for charities, without crashing the market or making life impossible for the inheritors.
Right. You need a plan to actually turn some of that Bitcoin into usable money without chaos.
Precisely. Think about it. You hold $9 billion in BTC, you pass away. Your heirs might face immediate massive capital gains taxes if they need to sell even a portion. Plus, just transferring digital assets securely, legally establishing ownership within a trust, making sure private keys are accessible but safe, maybe across different countries. It's a legal and logistical nightmare waiting to happen.
Yeah, I can only imagine.
So this kind of large-scale, managed sale, it lets the original holder basically convert a part of their massively appreciated, highly concentrated, and somewhat tricky to handle digital asset into more, well, boring, but manageable assets, traditional stuff, liquid stuff.
Takes the burden off the future generations, in a way.
Exactly. It provides a clean, managed way to handle taxes up front. And it ensures that the next generation receives stable, usable wealth without the immense stress and risk of managing this one giant, volatile Bitcoin position.
So it's about making sure the wealth is actually manageable, transferable, efficient, not a burden.
Yeah.
It signifies Bitcoin sort of graduating, being treated like any other major asset in a huge wealth portfolio.
I think that's the argument, yeah. This type of transaction is often seen as a feature of maturity for any asset. When something reaches this kind of valuation, it naturally starts getting treated with the same traditional financial strategies you apply to other forms of immense wealth.
Right.
So the seller isn't necessarily losing faith in Bitcoin's future. They're just prudently managing an extremely large, valuable, and concentrated portfolio. It's a sign Bitcoin is growing up, moving from niche experiment to a recognized, if still unique, asset class that fits into these big, sophisticated wealth structures, like fine art or real estate or private equity.
It implies that maybe, for this investor, Bitcoin already delivered its promise, those unbelievable returns. And now it's just time to manage the winnings for the long term, for family, for philanthropy, whatever their goals are.
That's the crux of the practical argument. Smart financial stewardship of an extraordinary fortune. Not necessarily a negative verdict on Bitcoin itself. You compared it to a founder selling company's stock that's spot on.
Or that long-term stock investor rebalancing.
Exactly. Selling a chunk after decades of massive gains to diversify, get income, fund retirement, give to charity, it's a strategic move. It secures liquidity, manages risk on a multi-generational timeline. It reflects the asset's current huge value, not necessarily a prediction of doom. This perspective sees the sale as calculated, responsible, mature, both for the asset and the investor.
Okay. That side is clear.
Right.
But then we have perspective number 2, the losing faith argument. And this is where the ideological battle lines really get drawn in the community, isn't it?
Very much so.
If you're someone who believes in Bitcoin's revolutionary potential, right, someone who really bought into the OJDL ethos, its disruptive power, then seeing an OG, a Satoshi-era whale, sell off so much, yeah, it could feel like a betrayal, or at least a big cause for concern. Why does this perspective hit so hard for so many people?
This perspective resonates really deeply with those who see Bitcoin not just as like another investment, but as a movement, an ideological statement, almost a quasi-religious conviction for some. For them, Bitcoin's about decentralization, breaking free from the old financial systems, enduring against all odds, fundamentally changing the world.
It's bigger than just money.
Much bigger. The OJDL ethos isn't just a profit strategy for them, it's a commitment. It's a testament to unwavering belief in Bitcoin's ultimate success, its role in reshaping global finance. It's like a badge of honor to say you held through the crashes, through all the ridicule. So when a Satoshi-era investor, a pioneer, sells such a massive amount, it challenges that core narrative in several really profound ways.
How so?
Well, firstly, it just directly contradicts the OJDL mantra, doesn't it? Yeah. It suggests that even the most committed, the earliest adopters, might have a price, a point where their conviction wavers or at least bends to practicalities.
Right.
It raises that uncomfortable question. If the original believers, the ones who got Bitcoin from the start, who weathered the most uncertain years, if they're cashing out now, what does that imply for everyone else? Are they seeing something we aren't?
It's like asking, did they just see the ceiling, you know? Are they signaling a peak? Or maybe that the risks now just outweigh the rewards, even for the truest believer.
Exactly that.
Yeah.
It might suggest these early adopters see maybe diminishing returns ahead, or maybe the risks of holding such a concentrated, volatile asset at today's valuation are just too high, even for them, so they're de-risking.
Okay.
This view, it doesn't focus on the practicalities of estate planning. It zooms in on the ideological implications, the psychological impact. It questions the commitment of those earliest supporters. If the true believers are stepping away, if their faith is actually waning, what does that mean for Bitcoin's long-term path? Does it imply the revolutionary journey is hitting a plateau? Or that its fundamental purpose is getting diluted as it gets more mainstream? It sparks fear, right? Fear that the asset might lose its foundational support, which then leads to questions about future price, about its overall ideological direction. It's a profound psychological tremor for a community that's really built on shared belief.
So, for you listening, how does your perception of Bitcoin change if you consider that maybe its earliest pioneers are stepping back from their foundational holdings? Does it make you more cautious,
Yeah.
make you rethink your own position, or do you see it as just natural evolution, maybe even necessary, passing the torch to new people, new forms of adoption? It's a really personal question for anyone in this space, and the sale just forces it right out into the open. This whole debate, then, whether you frame it as practical rebalancing or this concerning loss of faith, it really boils down to what our sources are calling Bitcoin's identity crisis.
Mm.
The community reactions, so passionate, so polarized, they apparently revealed a rift between Bitcoin's cypherpunk roots and its institutional future.
Okay, let's unpack that, this crucial identity crisis. What do we actually mean by cypherpunk roots, and how does that clash, like, so fundamentally with an institutional future?
Okay, yeah, to really get Bitcoin's cypherpunk roots, you kind of have to go back to the 80s and 90s.
Okay.
The cypherpunk movement wasn't formal, really. It was this loose collective of activists, cryptographers, computer scientists, and they were all advocating for using strong cryptography, privacy-enhancing tech as a way to achieve social and political change.
Using tech for change.
Exactly. Their core philosophy was rooted in this deep belief that privacy is absolutely essential for a free society, especially in the digital age that was just starting. And cryptography, that was the most powerful tool they had to achieve it.
Makes sense. They envisioned a world where individuals could have financial autonomy, freedom from government surveillance, from censorship, from control by big centralized financial institutions. Think about key figures like Timothy C. May, his crypto anarchist manifesto was huge, or
Yeah.
John Gilmore, co-founder of the EFF.
Right, the Electronic Frontier Foundation.
Exactly. And precursors to Bitcoin actually came out of this environment. Things like Wade I's B-money concept, Adam Back's Hashcash.
Yeah.
They were exploring digital cash that was resistant to censorship, resistant to inflation. For many of these early thinkers, the traditional financial system was just opaque, centralized, easily manipulated or censored by powerful groups.
So it was fundamentally about empowering the individual against the system, using code as a weapon for liberty almost.
Absolutely. You could think of it as a kind of digital libertarian movement, this profound desire for financial freedom, personal freedom through cryptographic tools. For many of them, Bitcoin, when it just mysteriously appeared in 2009 from Satoshi Nakamoto.
Yeah, the mystery.
It was the ultimate embodiment of these ideals.
Right.
Finally, a peer-to-peer electronic cash system, truly decentralized, permissionless, inherently resistant to censorship. It let anyone, anywhere send value without needing a bank or a government or any intermediary.
A tool for financial freedom.
For the little guy, yeah. Built on immutable code, on math, not on trusting institutions that could fail you. You can draw a parallel to the early internet, maybe. That vibe of independent developers, open source, radical freedom, innovation, where encryption was seen as the key to personal liberty.
Okay, that's the cypherpunk roots. Clear. And then the institutional future. That just sounds like the complete opposite, almost like giving up on those ideals. What does this future look like for Bitcoin?
Well, the institutional future, it represents Bitcoin's undeniable, and some would argue maybe necessary, integration into the existing global financial system.
Okay.
This future looks like large, regulated financial firms like Galaxy Digital and Our Story, facilitating multi-billion-dollar transactions. It involves the rise of Bitcoin ETFs, right?
Yeah.
Traded funds.
Yeah, the spot ETFs were huge news.
Exactly. They allow traditional investors to get Bitcoin exposure through regulated channels without actually holding the keys themselves. We saw futures ETFs first, now spot ETFs, drawing in potentially trillions in traditional capital. This future also means Wall Street banks getting involved. Massive hedge funds, asset managers, they're now offering Bitcoin products, services to their clients, prime brokerage, sophisticated derivatives, custody, the whole 9 yards.
So Wall Street embracing it.
And it entails increasing regulatory scrutiny. Governments worldwide are trying to figure out how to fit Bitcoin into existing financial rules, often with a heavy focus on KYC/AML, know your customer, anti-money laundering compliance.
Which means identification, tracking.
Right, which clashes with some of the original privacy ideals.
Huh.
Ultimately, this institutional future signifies Bitcoin moving towards mainstream adoption, but maybe not as that radical anti-establishment alternative, but more as a new high-growth asset class within the established financial order. It's becoming part of the system it was arguably meant to disrupt.
Wow. So, okay. On one hand, Bitcoin was born from this deep desire for financial freedom from big institutions, from centralized control, a crypto rebellion. On the other hand, its current massive growth, its mainstream adoption, that seems to be powered largely by those very institutions it was designed to bypass. How does a $9 billion sale, handled by a firm like Galaxy Digital, a perfect example of this institutional integration, how does that just pour gasoline on this tension?
It lays the dilemma bare, doesn't it, this specific transaction?
Yeah.
On one hand, you have to say it's an undeniable win for Bitcoin's validation. It demonstrates its incredible value, its liquidity, its ability to attract serious capital for the traditional finance world. The very fact that a Satoshi-era whale can exit such a huge position in a professional, managed way, that's a sign of market maturity, no doubt.
Right. You couldn't have done that easily years ago.
Absolutely not, yet. This success is achieved precisely through the traditional financial mechanisms, the institutions, that Bitcoin was originally designed to circumvent, maybe even replace. It's deeply ironic. The early cypherpunks, some of them literally wanted to dismantle the financial system as we know it. Now, Bitcoin isn't dismantling it. It's becoming an increasingly valuable part of it. And a huge chunk of its current value comes directly from that integration.
It's valued so highly, it reaches these crazy market caps, largely because the big institutions want in. But those institutions are everything it was supposedly rebelling against. It's a real paradox.
It is.
Yeah.
And it forces the community to confront that fundamental question. Does widespread adoption, does massive financial success require a fundamental compromise on those core ideals? The anti-establishment, the decentralized principles.
Yeah.
Can Bitcoin truly be both things at once? Can it be this decentralized, permissionless asset empowering individuals and a heavily institutionalized, regulated investment vehicle without losing its soul, its essence?
That's the million or billion-dollar question.
It really is. If its success is increasingly measured by how well it fits into the very systems it aimed to disrupt, does it still have that revolutionary spirit? And this compromise, it isn't just theoretical, right? It shows up in real-world debates. Debates over Bitcoin's protocol development, its future direction. For instance, some people argue that features enhancing privacy or building truly decentralized exchanges things, core to that cypherpunk vision of financial autonomy, they're being subtly deprioritized. Maybe even ignored.
In favor of what?
In favor of, say, scalability solutions that better serve institutional liquidity needs, or adding features for regulatory compliance that make it easier for big entities to plug Bitcoin into their existing systems, even if it costs something in terms of decentralization or privacy.
So the tech roadmap itself might be shifting.
That's the concern for some. This $9 billion sale isn't just a financial event. It's a stark illustration of how chasing mainstream valuation can subtly, or maybe not so subtly, reshape the technology itself, reshape the philosophical foundation. It shows that even for the earliest believers, the allure of vast, realized wealth managed through familiar, traditional channels that can sometimes supersede the original ideological purity.
So why should you, our listener, care about this philosophical debate, this identity crisis? Because it profoundly affects Bitcoin's long-term path, its utility, and yeah, ultimately its value proposition. Is it this revolutionary force going to remake finance? Or is it just another speculative asset that eventually gets tamed, absorbed by Wall Street, and loses its unique edge? The answer to that, well, it will define Bitcoin's future, and it'll shape how you might interact with it. So as we kind of bring this deep dive toward the close, it seems abundantly clear. This transaction wasn't just a ripple. It was a clear, powerful signal about Bitcoin's ongoing, pretty profound evolution. It shows us just how deeply intertwined market activity, individual financial choices, and the very identity of this digital asset really are. It forces us to look at its past, its volatile present, and its uncertain future, all at the same time.
And if we connect this to the bigger picture, this single event, it really serves as a microcosm, a small example of the larger forces playing out across the entire crypto market, and maybe in the adoption of any groundbreaking tech, really.
How so?
It just highlights that inherent tension, doesn't it?
Yeah.
Between the long-term ideological vision and the short-term, often unavoidable financial realities. It reminds us that any truly disruptive technology, as it scales up, it inevitably faces immense pressure to adapt, to integrate with existing systems, and sometimes to compromise on its founding principles just to achieve broader impact.
It's a powerful reminder, too, to always consider multiple perspectives when you look at market events like this. Was this a sign of weakening conviction from an OG, a kind of warning flare, or was it just astute, necessary financial management of an unprecedented fortune, a sign of maturity?
Right. The answer probably isn't simple. It's nuanced. And in many ways, the fact that this debate is happening so vigorously, that itself is valuable. As valuable as a transaction, maybe, it pushes the community to self-reflect, to question, to really define what Bitcoin means to them
now.
So as Bitcoin continues on this journey, integrating more deeply into the traditional financial world, we see it with these huge transactions. With ETFs, it forces us to ask a fundamental question, something for you to consider as you think about this deep dive. Here it is. In embracing an institutional future for broader adoption for this unprecedented financial scale, does Bitcoin risk fundamentally diluting its original cypherpunk roots? Is it slowly morphing into something it was never meant to be?
Or is this evolution, this integration, simply a necessary step,
Mm.
an inevitable stage for its ultimate survival, its global impact, its long-term relevance?
It's a huge question.
It is. And it's a question that will continue to shape how Bitcoin is seen, how it's used, and what role it ultimately plays in our global financial landscape for, well, for decades to come, I imagine.
And that wraps up our deep dive into the $9 billion Bitcoin whale sale. Wow. We've journeyed through the just astounding scale of it all, explored those really conflicting interpretations, savvy estate planning versus a worrying loss of faith, and ultimately, we've grappled with Bitcoin's ongoing identity crisis, that pivotal struggle between its revolutionary cypherpunk origins and its perhaps inevitable institutional future.
We really hope this gave you a lot to think about.
Mm.
We encourage you to reflect on these complexities. What does Bitcoin mean to you? How do you interpret these massive, potentially game-changing transactions? Your engagement with these questions, your critical thinking. That's part of what makes this whole space so dynamic, so endlessly fascinating.
Absolutely. And before we sign off, we just want to take a quick moment to ask for your support. If you found this deep dive insightful, if it helps you get up to speed quickly, cut through some of the noise out there.
Which there's a lot of.
Oh, yeah. Please consider subscribing to our channel. Your comments, your likes, engaging with our videos, it honestly really helps support what we do here.
It really does.
It boosts our visibility, you know how the algorithms work, and it just lets us keep creating this kind of quality crypto content, making sure we can keep bringing you the most important insights in these deep dives.
Yeah, every subscription, every comment, every like, it truly helps us reach more curious minds, just like yours, and continue our mission of making these complex topics accessible and hopefully engaging.
Thank you so much for joining us on this deep dive. We look forward to exploring more fascinating topics with you next time.